afternoon, everybody. It's wonderful to be here. It's a great privilege to be in your beautiful country. In fact, I love it so much here. I've been here 5 times in the last 5 years, mainly because my mom and my sister live here, but also because I climb mountains and do rock climbing when I'm not being a payments and banking geek. And in compiling this presentation, with a climbing mindset, I started to think about how I approach a new big wall. When you're climbing a high-grade wall, you have far fewer handholds, and so you have to do what's called reading the wall. And so typically what I'll do is spend 5 to 10 minutes working out which left and right hand and foot goes where. Because unfortunately, if you get halfway up the wall and you get your hands the wrong way around, it's extremely difficult to down climb and retrace your steps. And so this got me thinking about where we're going, which is very much aligned with what Jim was saying about the future. Are you ready for the future? And it made me think about some time that I had a couple of months ago with Sharad Sharma, who posed 2 CEO panic questions. So I want to see, by way of raising your hand, how many of you in the audience believe that banking and payments will change more in the next 5 years than it did in the past 30 years? So raise your hand if you believe so. Okay, it looks like pretty much the whole community is in that mindset. So if that is the case, how many of you, by way of raising your hand, know what banking or payments will look like in 10 years from now? Okay, I don't think there are probably 2 hands. So really, what I'm talking about here is the digitisation of the Australian landscape. And I was surprised 3 years ago when I arrived in the country, and looking back 3 years, I've drawn cash no more than 10 times. And that really surprised me, because Australia is a small country, highly digitized, and not particularly stand out on many of the dimensions, other than the last time the country experienced a recession was when Tim Berners-Lee was trying to explain to the world what www meant. So the graphs are pretty self-explanatory. Just over 3 years ago, cash crossed over with credit cards, and debit card has grown by more than 50% in the last 5 years. When we compare ourselves to other countries, you'll see the blue bar in the middle is Australia, and the darker turquoise is Germany, and the yellow is Sweden. Now, 2016 was the last time cash was measured. We're now at 37% cash used as a form of transaction. I believe that will likely go to somewhere in the low 20s in the next measure, which is in 2019. Now, notwithstanding the fact that cash as a means of payment has reduced so radically, cash as a store of value has increased quite dramatically, and surprisingly so. In fact, of every citizen in Australia, each citizen in Australia has at any one point in time 14 $100 bills in their safe or back pocket. Now, I don't have one of those 14, so I'm looking around and wondering who has my 14. The countries that are ahead of the curve are Australia, Sweden, and the United States. We are by no means the canaries down the mine in the same level as the Nordic countries and Sweden, and our central bank typically loves to say that Australia is briskly marching or taking a brisk canter, but not a run towards cashlessness. When we have a look at the graphs, and you really just need to do the color coding here, the yellow indicates checks 10 years ago, or more than 10 years ago. Yellow to 2016, dramatic reduction, no surprise. Of course, card not present, the orange bar, has gone from less than 20% to over 80%. Interestingly, when we consider the fraud when we remove checks, the purple bar here is now card not present fraud. More than 85% of all fraud in Australia is perpetrated in the online space. Remembering that online only represents between 13 and 15% of all payments. So a dramatic increase, and there's an enormous amount that the country is doing on a collaborative basis. A new code was just introduced, very similar to the European market. However, that code is focused at a self-regulatory basis, rather than using hard regulation, which is the European approach. So one would ask oneself, what are the drivers and why indeed is Australia so far ahead in digitisation? One of the key reasons, and this is the introduction of contactless. And the introduction of contactless happened when that cash curve started dropping precipitously in 2012. The merchants, together with the payment schemes, worked vigorously to educate the population. So in general payment terms, 9 out of every 10 transactions are now done on a tap-and-go basis. Another important trend is the change in the payment that's driving the change in the payment mix is the fact that 9 out of every 10 citizens in Australia own a smartphone. And so it's no surprise that the take-up and the willingness to adopt new technologies is extremely high. And so what does this mean for Australia? We've changed transformationally. I was surprised by the level of development in both the payments and the financial services community when I moved to the country 3 years ago. That said, the country has been very much exposed to sincere and genuine regulation in a way that it's not seen in the past at all. We've followed very much the British path. A royal commission, a stinging royal commission came in and fundamentally changed the focus of the banks to operate and the response to operational risk and to compliance in general. This gave rise to a focus on open data, and interestingly, Australia has introduced a mandate for open data, which is not exclusively focused on the banks. Australia's open banking consumer data or open data consumer data right is focused in different in 3 different ways to the European environment. Firstly, it's a read and not write access that's mandated, i.e., reading data and not transacting on a person's bank account. Secondly, it's focused much broader than the financial services industry. So energy industries, health industries, telco industries will also in time be forced to mandate open banking. And third and final, the industry is mandated to reciprocate data. And so one of the competitive asymmetries in the European market is that social media and tech companies are potentially able to go in and plug their sockets into the bank environment, extract all the data out, and not necessarily reciprocate. Of course, so Australia has mandated that reciprocal data exchange must be possible in the event that you're plugging your sockets into one of the banks, who are the first cabs off the rank. The move to cashlessness has also created a revolution in the business models in Australia. Late last year, many of you would have seen that CBA led the pack, and all 4 large banks introduced ATM-free transactions, thereby giving up an enormous source of revenue. And so this was a very important step after the Royal Commission, firstly, to demonstrate by the banks that they had heard the customers' requirements and the customers' call, and also to create an opportunity to reduce the ATM footprint within the banking environment, because customers now no longer had one bank ATM that was effectively their bank, but all bank ATMs were their bank ATMs because there were no fees attached. And so this has been a very interesting transformational initiative that has allowed banks to effectively reduce their ATM footprint, which is an enormous source of cost, but not degrade and reduce the customer satisfaction and customer experience. Within the Australian industry, most of you would have heard about the Faster Payments Initiative, which is new payments platform that was introduced in February of last year. It's a very sophisticated technology stack which allows for new innovations to be built in a seamless and very agile way. Alongside New Payments Platform, 3 of the large 4 banks have collaborated to develop a solution called BMIT, very similar to Venmo, except the difference between New Payments Platform and BMIT is that BMIT uses the traditional rails. It pushes payments through its credit payment rails, and it pulls payments through the national debit scheme rails. And so New Payments Platform and BMIT, I believe, will transform further the cash trajectory towards zero, because many of the peer-to-peer payments, particularly those done in the SME market, will now likely be done on a digital basis. Of course, CBA recently announced the expanded customer base with Alipay. And so the question on everyone's minds is whether tap and go or QR code will prevail in a country like Australia, which is deeply connected to the Asian community and the Asian timeline. Right now, Australia has the highest penetration of point-of-sale devices per capita in the world, based on BIS stats, and all of those point-of-sale devices are NFC enabled. So it's going to be interesting to see whether there is a disruption of the NFC way of paying and the very easy tap and go mentality, which is so ingrained in our way of paying in Australia. At CBA, artificial intelligence and blockchain, I'm a little nervous to use that blockchain word after I tweeted that Tim Berners-Lee thinks we shouldn't use it, and I agree very much that we shouldn't be using it for payments. Be that as it may, the artificial intelligence world, what Jim had mentioned about voice very much resonated with me. I truly agree with your perspective that voice is most definitely the way of the future. It's the kind of thing that people often tend to overestimate in the short term and underestimate in the long term. There is a long way to go in developing that, and we have introduced Siri commands into our payments app. We've also done some interesting work using natural language processing to identify the plethora of regulatory changes that are happening in the world and force those through our systems in a systematic, integrated regulatory update and audit fashion. And that's an interesting alternative approach. Of course, fraud is a highly used use case, and there's nothing new there. Now on to the dreaded B word. I'm glad that Tim Berners-Lee is not here because, shamefully, CBA has done a lot in this space. I believe that there is a place for blockchain in the future. It's not necessarily in the high volume and high performance payments environment, but certainly in a digital identity space or potentially in trade finance. There is a likely and plausible scenario using that technology. In 2016, we introduced the first trade finance deal, which involved a deal with Bingham Cotton. And most interestingly, the project that's really caught my eye and I've been particularly interested in is our collaboration and partnership with the World Bank to introduce the world's first bond blockchain trading solution. Now, the first primary market trade was done last year, and just yesterday there was another announcement introducing a secondary trading environment. As you can see, we've partnered with a number of Canadian banks, and we're particularly excited about this development, and it'll be interesting to see whether it evolves and develops momentum. We've also done a national disability scheme, which is a really complex scheme involving making money smart, which is a smart form of money that uses rules, programmable rules for recipients of national disability schemes to apply in a day-to-day environment. And that was an extremely successful pilot. I'm going to draw to a close with one of the industry initiatives that we are managing through the Australian Payments Network, and that is a digital identity approach. What we're going to be introducing is a trust framework, and this will govern the way in which digital identity is rolled out within the country. Thank you for listening, and I hope you enjoy the rest of the conference.